It is Friday, August 17th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very productive, although short-handed, there weren't too many people at it, get your ass kicked at Jiu-Jitsu Friday. We did, what the hell did we do? We did some stuff with the spider guard today. And I'm not as well versed on the spider guard as I would like to be. As a matter of fact, I really need to be putting a lot more time to my jiu-jitsu because, I feel at my core that I've got like the instincts of a ninja warrior, but the body of a fucking clown. I got the mind for it, but I don't have the body for it yet. I'm still really clumsy. I'm still really grabbing onto shit that I don't need to grab onto. Although every once in a while, that inspirato, that ninja, will pop out from over my shoulder and say, "Hey, dude, try this," and I'll do it, and it works. So it's like. It's one of those things where I'm trying to get that inner ninja to be doing more of the talking instead of the, "Oh my god, he's coming for my arm, oh my god, he's going to get my ankle, he's going to get my neck." There's too much of that going on in my head, But anyway, like I said, we did some spider guard work today, and I really like it. There's a drill I saw online, and I feel like going to the dojo and getting somebody who would be willing to do it for like 2 hours straight, just nothing but this. And it's a progression from, it's a drill, right? But it's a progression, and it goes all the way from full guard all the way out to double spider guard, or was Delahiva? No, it was spider guard. It goes from full guard to butterfly guard to, or no, it ends in butterfly guard, I think. But anyway, it covers all of those guards, and it's just a progression where you go into it from the full guard to the spider guard to the butterfly guard to the full guard to the spider guard to the anyway. I need to do that for like hours on end. Because I don't have the hip coordination that I need, man. And, like I said, every once in a while, it'll click in, It's like there's this warrior script, and it's always in my subconscious somewhere, right? And it's like when my heart and my heart rate and my consciousness tunes into it, it'll fucking click into where that script is like the primary, and I've gotten it to where, I was going like 4 or 5 times a week, like for months on end before I ended up getting injured doing that. But before I got injured though, that script was really taking over with regard to my jiu-jitsu. It's like more the mind of somebody on the mat as opposed to somebody sitting on their ass in front of a computer. You know what I mean? It's like I do this for 3 or 4 hours a day, 5 or 6, maybe more. I'm not going to admit to more. But anyway, like I said, because this doesn't involve choking people out or trying to go for their arm or whatever, my body is more attuned to this kind of lifestyle, to the point and click bullshit, as opposed to being on the mat. And so, my like neuromuscular business is all tuned to point and click instead of trying to strangle somebody. And I need to get more minded to strangling people. And the only way to do that, spend more time on the mat. So, yeah, we were doing a really interesting Shark Tank towards the end or at the end of class. I really enjoyed it. Honestly, it's another thing that I could stand doing for maybe a half an hour or so. And it was one person would be on the bottom for 3 minutes, whether or not they submitted or swept their opponent. And but if they did sweep, or the opponent managed to pass, or they were submitted or whatever, the opponent would have to switch out with the other partner in the team, because it was teams of 3. But anyway, I felt like it was a really cool drill, and I would like to do that more. Because, you're always getting somebody fresh, whether or not you got submitted, or whether you submitted them or they submitted you, get somebody fresh right in front of you right after that. And, I like that a lot. Anyway, let's go ahead and get into some music. Launch it. I did do some really interesting stuff with the Shark Tank, though. The pose was that we were supposed to be with the opponent is standing, and the person in the Shark Tank is laying on their back with their opponent in spider guard. And I did a really interesting way to get out from my opponent's grips, or actually past their guard without actually needing to get out of their grips. Twice, as a matter of fact. But enough of that. Let's go ahead and get into some music. And I haven't picked anything out, but I got to throw it down because there's a lot of green candles out there, and I know there's some profit takers going on. So here it is, the Ski Mask Way, First Dance by Body Count, here on Coin Metal. And that was Can't Wait for Violence by Nothing Face. Good stuff. Kind of sedate. Got some of that lemon shortbread in me, and tell you what, man, that'll knock your dome. Knock your dome. Working on some indoor right now, and oh my goodness, I'll tell you what, there's like when you're growing, there's a certain weightiness about it. It's like you lift up or you feel a branch of it, and you just know that it's like holding the barrel of a shotgun or something. There's just so much destructive power in that bud. And so yeah, I can't wait to get that going. Anyway, so first up, and this one was just something that I came across, and I wanted to touch on it because I do think it's kind of an important thing. Although it's not entirely crypto related, we have gone through a great deal of censorship here in the crypto sphere, and not just pertaining to our Bitcoin, r/Bitcoin on Reddit, or anything like that, with regard to people blocking one another on Twitter and shit like that. That's not what I'm talking about here. This goes much deeper, and it hit recently with Alex Jones. And I happen to be very, very against censorship. I don't have to like what you say, but goddamn, I will fight for you being able to say it. And having other people having the opportunity to hear you say it. I'm kind of a First Amendment absolutist when it comes to that, because I don't think anything good comes from censorship. I think any effort that you make to censor bad people invariably will be abused and will be used to censor you. That's all there is to it. So anyway, I got this article here on ZeroHedge.com. This week showed internet censorship is as much a threat to the left as the right. And this is by Tyler Durden, of course. And this is authored today, the 17th of August 2018 at 22:45. No indication of time zone. Fuck you, Tyler. Continuing. The banning of right-wing controversialist Alex Jones from multiple social media platforms last week was a cause of celebration for many liberals. But should those on the left be really so complacent about creeping censorship? So far, the evidence suggests that there is indeed plenty for the left to worry about when it comes to corporations like Facebook and Twitter and their alliances with government censors. Number 1. Facebook censorship of Venezuelan news. In May, Facebook partnered with the Atlantic Council in an effort to weed out inauthentic content on the platform. The organization is funded by various NATO governments and a slew of arms manufacturers like Raytheon, Lockheed Martin, and Northrop Grumman. Its board includes names like Henry Kissinger and former CIA Director Michael Hayden, and it has consistently lobbied for regime change in Syria and, you guessed it, Venezuela, where it has funneled large amounts of money into pro-opposition groups for years. So it's no surprise that weeks after Facebook partnered up with this less than objective group, it deleted from its platform the page belonging to top English language left-leaning Latin American news outlet Telesur without any explanation at all. The page was restored 2 days later, with Facebook citing vague, quote, instability on the platform as the cause of the block. Telesur just so happens to be one of the only major outlets reporting on events in Venezuela in a manner that goes against the U.S. government position and U.S. mainstream media perspective. So obviously out with Alex Jones it must go. It wasn't just Telesur, though. Facebook deleted the pages belonging to Independent Grassroots Venezuela Analysis and Haiti Analysis, which are also leftist websites highly critical of U.S. foreign policy in Latin America and the Caribbean region. And here's a tweet by Aaron Mate. Facebook's shuttering of Telesur English's page comes days after it did the same to Ven Analysis page without explanation, the latest outgrowth of Facebook's Orwellian partnership with the Atlantic Council. Yeah, and I'll just leave it at that. Number 2, Facebook complying with Israeli deletion orders. Last year, journalist Glenn Greenwald reported that Facebook met with Israeli government officials to determine which Palestinian activists should have their accounts deleted. The Israeli government threatened to enact laws forcing Facebook to comply with its deletion orders if it did not do so voluntarily. Of course, Facebook capitulated immediately and set about deleting accounts owned by Palestinian activists. Of some 158 requests submitted over just 4 months by Tel Aviv to Facebook asking for the removal of Palestinian content, 95% of them were granted. According to the same Intercept report, Facebook hasn't been overly concerned about what Israelis themselves are saying on Facebook, and even calls for murder can be ignored by the social media giant. That's pretty fucking disconcerting if you consider that for a moment. Number 3. Google and Facebook censorship of left/socialist websites. Well, I don't know that I feel too bad about that because I don't like socialism, but they have a right to speak and a right to be heard. The World Socialist website reported last year that changes to Google's algorithms had seriously negatively impacted left-wing socialist and anti-war websites. An analysis by WSWS found that 13 such websites had seen their traffic plunge by a whopping 55% in the 6 months since Google had changed its algorithms. WSWS itself experienced a 74% drop in traffic between April and July last year. The changes also affected sites like Alternet, which saw its traffic plunge by 71% between April and September. Democracy Now! 50% drop, and truthout.org 49% drop. Similarly, Police the Police, a page dedicated to exposing U.S. police brutality, and the Free Thought Project, which focuses on government transparency, also saw their Facebook page traffic tank in 2018 after Facebook made changes to its newsfeed and search algorithms in an effort to combat, quote, fake news. P2P traffic dropped from between 12 to 15 million people per week to about 4 million, and the website had to fire its writing staff as a result. The left is cheering this on when historically the left is usually the side cheering for free speech, PTP founder Jason Bassler told Mike. Amidst all of the celebration over the banning of Jones, some of the left cautioned that, in fact, the left may indeed be the real target in all of this, in that those celebrating while people like Jones are banned are in fact being conditioned into accepting further censorship down the road. Duh! Fuck yeah! Number 4. Legitimate left-wing protests targeted. A particularly strange example of Facebook's commitment to banning, quote, fake news and promoting a nice, cozy atmosphere for everyone online is its decision to delete event pages for anti-racist and anti-fascist protests happening in Washington, D.C. The No Unite the Right to D.C. event, a counter-rally against a previous white nationalist event in the city, was taken down after Facebook decided it displayed, quote, coordinated inauthentic behavior, the kind of random phrase that can no doubt be arbitrarily applied to anything without explanation. I couldn't agree more. The event organizer said in a statement, quote, "This is a real protest in Washington, D.C. This is not George Soros. It is not Russia. It is just us." Number 5, Twitter suspending and banning anti-war activists. Twitter has come under fire recently for, quote, shadow banning conservative accounts, making them harder to find on the platform and having their tweets appear less prominently in people's feeds in an effort to limit their audience. But again, it's not just the right. Twitter recently suspended the accounts of Daniel McAdams, the executive director of the Libertarian and Anti-War Ron Paul Institute, and Scott Horton, the editor of the antiwar.com website. Explaining what happened, McAdams said that he and Horton were suspended after defending former U.S. diplomat Peter Van Buren, who had just been banned permanently from Twitter after heated exchanges with journalist Jonathan M. Katz over what Van Buren said was his, quote, unwillingness to challenge government lies. In one of his tweets to Katz, Buren sarcastically commented, quote, "I hope a MAGA guy eats your face." Katz reported him for, quote, promoting violence, and Twitter later caved and removed Buren's account. Fucking pussy. In explaining his suspension, Twitter told McAdams that he could not, quote, promote violence against, threaten, or harass other people on the basis of race, ethnicity, national origin, sexual orientation, gender identity, religious affiliation, age, disability, or serious disease. None of which he accepts that he did, and I don't accept that he did either. Perhaps the really amazing thing about all of this is that it is happening in front of our eyes, and the powers that be are not even bothering to lie about it. Elected U.S. officials are openly promoting this kind of censorship as a way to prevent the, quote, sowing of discord amongst populations. At a Senate Judiciary Committee last year about, quote, extremist content and Russian disinformation online, Democratic Hawaii Senator Mazi Hirono called on social media platforms to prove their commitment to preventing, quote, the fomenting of discord online. Working hand in glove with governments, corporations like Facebook have been handed enormous power to decide what constitutes free speech and which opinions are worthy of being heard. How long will it be before people realize banning Alex Jones wasn't really a victory at all? That's right. It was not a victory for anybody. And let's check if there's any comments. Wow, there's no comments on this. What do you bet they're deleting the comments for it? Well, there you have it. Creeping fascism throughout social media. Now, I got to tell you, there is an answer to all of this. And those of you in crypto already know what it is because you've already done this with regard to at least one currency, that being your national currency, national fiat currency, that is, where you have observed the other options available and said, my money is better placed in Bitcoin or Bitcoin Cash or any number of other cryptocurrency projects as opposed to US dollars or Swiss francs or Russian rubles or Chinese yen, whatever the fuck it may be. Venezuelan bolivars. And so now you're going to be facing this same decision with regard to social media. And I'm going to tell you right now, we've already seen this transition before. When MySpace started to suck, everybody started looking around saying, I need a better option. And then Facebook just happened to be there, and Twitter just happened to be there, and people decided to use them. Now, you might have to make that decision again. You might have to abandon your fucking Facebook account, and you may have to abandon your fucking Twitter account. And I don't like that because I use both mediums to promote this show and stuff. So, however, I'm willing to do it. I'm willing to shit can both accounts because they're becoming too big a pain in the ass to maintain. You know, not only is it something where I'm regularly blocked by people on Twitter. And the latest person that blocked me, I'm really surprised about because I've known the guy on Twitter since 2015. He fucking blocked me the other day. And I'm like, wow. I wonder who's got their hand up their ass that you decided to block me. Well, enjoy your whoredom, man. But anyway, you know, it just goes to show you that these things aren't really worth as much as we as much value as we put in them, you know. And we really have to ask ourselves what value they do have for us. You know, if they're going to go that far in censoring people, then I don't think they need my time. I think I need to find somewhere else to and get all my friends to go there too. You know, and if they want to join me on another platform, so be it. But really, you know, it's bad enough that they sell your information and they sell your search patterns and all that other bullshit, that they're monitoring all of that. But on top of that, they're now stopping you from conveying things to other people and limiting your reach to others. And that's kind of like antithetical to social media. You know, it's like the idea of using third parties to use your crypto. Cryptocurrencies were made specifically to not need third parties in order to transact them. But if you need absolutely need a third party in order to transact it, is it really worth your time to bother with that token or coin? Probably not. Eventually, it's going to end up costing you way more to continue to use that coin, because they're going to do it the Facebook and Twitter way, where, you know, you tolerated it this long, you'll tolerate it a little bit longer, and a little bit longer, and a little bit longer, and pretty soon you're used to taking it in the ass, and you'll just stay with it. I think it's a shame seeing something like that happen, especially in social media that's meant to connect people. And especially considering the vast things that I've seen done with social media. I've seen wars stopped on Twitter. And I mean literally, wars stopped on Twitter. I mean, really, imagine the whole Syria thing if we didn't have social media. Imagine if they were saying, oh, we have to go to Syria because Syria's gassing their people, right? And we find out later, of course, that that's all bullshit. And we find that out because we're getting news sources from all over the planet, not just the ones that the United States government has some sort of control over, or any other government for that matter. And so, of course, they're attacking the places where we actually communicate because they want to stop us from communicating, which I find is kind of futile because there's so many different means available. That if you really want to talk to somebody in a country where something is supposedly happening and find out exactly what is happening from that person, you can do it. There are means available for you. So the idea that they're going to be able to limit you, they might limit the initial discovery of you, but if somebody is curious enough and they're already looking for something, and chances are they're going to find you anyway. Yep. And you really got to wonder exactly what they're trying to protect you from. That quote-unquote fake news is being limited. I bet you anything, I read off at least one news source or one social media person or entity that you're aware of that you've gone to for news. So, whether you knew it or not, you were being impacted by this whole censorship bullshit already. Anywho, I got this next one here, and this goes more to that idea of, what is regulation supposed to be protecting you from when things like this are going on. This is on BitcoinWarrior.net. Stock exchange trader and banks implicated in $24 million Thai Bitcoin scam. An investor in the stock exchange of Thailand, SET, as well as employees in no less than 3 banks, have been implicated in the $24 million Bitcoin scam involving actor Jirat Pisit Boom. Goddamn, what a fucking name. Juravijit. Meanwhile, several members of the Juravijit family continue to be associated with the fraud, and investigators are ramping up their investigations into the matter. More suspects emerge in the Thailand Bitcoin scam saga. In the latest development in the ongoing Thai Bitcoin scam scandal, more participants in the elaborate scheme have been discovered by authorities. Among them are employees of 3 commercial banks in the country: Siam Commercial Bank, Bangkok Bank, and Kasikom Bank, as well as stock market trader Prasit Sriswan. According to an article in the Bangkok Post, employees of the banks failed to adhere to strict anti-money laundering protocols put into place by financial regulators in the country. As per Thai law, money transfers that exceed 2 million baht, $60,000, must be flagged by bank officials and reported to the country's anti-money laundering office, ALMO. Failure to do this constitutes a severe violation of bank rules. The stock trader in question, Sriswan, is believed to have been a recipient of some of the proceeds of the fraud. Sriswan is accused of deceiving the victims to the tune of 66.5 million baht, approximately $2 million, to buy company shares on behalf of the victims. According to local sources, the Set Whale is attempting to negotiate a settlement with the victims of the scam. Meanwhile, police authorities are considering whether to file charges against the banks and the suspected employees. As for the victims, they reportedly believed that Sriswan acted dishonestly, whereas the stock trader himself continues to protest his innocence. According to an inside source, Sriswan hopes to repurchase the shares as a way of escaping prosecution. Not going to happen, dude. Members of the Juravidjit family claim innocence. When the Bitcoin scam first came to light, it was headlined by the arrest of the Thailand-based actor Boom Juravidjit. Afterward, it was revealed that several members of the Juravidjit family have also been implicated in the case. Meanwhile, the actor was able to secure bail a few days later. The country's Criminal Suppression Division, CSD, has charged the 3 Juravidjit siblings, including the actor's elder sister, Saficha, and brother Prinya, who is the suspected kingpin of the scheme. According to reports, Prinya has absconded from the country. Yeah. Okay. Well, that sounds terribly interesting. Like, I don't know. I don't know what to think of that. I mean, because it sounds like it could have been perfectly innocent, and they just stopped the trade a little bit early, you know. But the guy bailed from the country, so chances are he really is a kingpin, and this really was a scam to defraud people. That's just going by the likelihoods. This would be tantamount to that guy Trayvon bailing on everybody that was tied into BitConnect. I gotta say this for him. At least he hasn't tried to run, and I don't know if it's because he doesn't understand how much trouble he's in, or he's just realized there's no fucking place on planet Earth he'll actually be safe. I mean, you gotta wonder. Anyway, let's go ahead and throw back down into some music. And I have not picked anything, of course, because, well, you know, that's just how we roll on this show. We just do it. Do it! And, oh, gosh. What the hell? Cowboys from Hell by Pantera. Here we go. And that was 12-Foot Ninja with Manufacture of Consent. Seems like there's a lot of that going on with that whole censorship business, isn't it?
So we've seen a huge
shit.
across all cryptocurrencies, a bit of a spike.
Fucking shit. Hate that. Hate it. Anyway, just to get this fucking article off of here, because I dislike the pop-ups so much, or at least the autoplay. Let's go ahead and throw it down. I got this article here on Bloomberg.com. With Bitcoin sinking, crypto miners just dig deeper. By Justina Lee, so clearly no penis. This is authored on August 16th, 2018, 5:18 a.m. PDT. With Bitcoin declining this year, you might expect mining activity to follow. That hasn't happened. The combination of falling prices and a rising hash rate, which measures computing power, shows how complex the economics of cryptocurrency mining are. An increased hash rate means Bitcoin mining is still profitable enough for many players to stay put, defying speculation that prices have fallen past break-even points. That may be a reflection of how sophisticated Bitcoin mining has become after last year's 1,400% price rally. While that drew a fair share of amateurs mining from their basements, the lucrative rewards also drove major miners to up their game by snatching up increasingly speedy chips and setting up shop in places with cheap power. That's helped them squeeze out smaller players as prices fall to the 6,000 level. Quote, "There are still major expansions happening, especially from more efficient miners," Marco Strang, chief executive officer of Genesis Mining, said by phone from London, quote, "The expansion is so big that it compensated for the dropout of not-so-efficient miners. New bitcoins are created when computers compete to process transactions by solving complex puzzles in exchange for tokens. As mining power increases, the calculations needed to generate new digital coins becomes harder. The mechanism designed to limit supply and dominance in the hands of a few miners." That's not actually what it's designed to do. See, the reason it's having that effect is because it's not as profitable for people in their basements to mine. If it were, i.e. if the blocks were bigger and more transactions could be processed per 10 minutes, then the number of miners would vastly increase, as the profitability would not be so hard to attain. Continuing on. The race to get ahead with top-notch technology has intensified so much that miners became key customers for semiconductor giants such as Nvidia Corp and Taiwan Semiconductor Manufacturing Company. And because of such advantages, the businesses became increasingly institutionalized and concentrated in the hands of companies like Bitmain or Bitfury. Now let's see here. While faster gains in the hash rate have coincided with price rallies in the past, the relationship between the two isn't so straightforward. Theoretically, a climbing hash rate should lift the price because it means the cost of each token is higher. But computing power may be rising now because of past expansions in capacity, which are a sunk cost to miners and reflect higher prices earlier. It's also possible that miners will sell more of their holdings as margins get squeezed. Quote, "The increased hash rate means people are here for the long term because they're happy to just accumulate what they have, potentially even run up at a loss," said David Sapper, Chief Operating Officer at cryptocurrency exchange Blockbid Pty Ltd in Melbourne. At the same time, quote, "They do sometimes have to clear house and dump." Various analysts have tried to calculate the break-even price for miners, which may offer support for prices. Bullish research firm Fundstrat Global Advisors has estimated $8,000. Morgan Stanley has said that large mining farms make money only with Bitcoin trading above $8,600, according to a CNBC report. Researchers at CoinShares, which offers cryptocurrency investment products, estimated in a May report the average marginal cost of a Bitcoin is $6,400. The digital currency traded at about $6,500 on Friday. The number varies depending on the miner's efficiency. Genesis Mining, for instance, is still expanding capacity, String said. Miners that also manufacture equipment have the benefit of immediate and cheaper access to their hardware and can adjust prices can adjust prices of their products to maximize profits, according to the CoinShares report. Yet it's clear that the heyday of cryptocurrency mining is over for now. Genesis Mining said Thursday it will terminate contracts that are mining too little to cover the daily maintenance fee. Semiconductor companies are also seeing a slowdown in demand from miners. Increasingly, cryptocurrency mining seems dominated by large competitive companies. Quote, "The efficiency of the hardware is rapidly increasing and costs are coming down," the CoinShares researchers Christopher Bendixson and Samuel Gibbons wrote. Quote, "Miners are securing access to highly competitive sources of electricity, often ones that would otherwise lie idle, and show high degrees of mobility." Yeah. Well, I think that I think that we're seeing some changes in mining that are going to cause the next rally to be a little bit different. For one thing, I think the $20,000 spike certainly did initiate a lot of interest, a lot of extended interest in mining. You know, where people are saying to themselves, I'm going to mine today at a loss because in a month, what I mine will be worth enough for me to cash out and re-up on my hardware. And that's a reasonable expectation in cryptocurrency. I mean, if you look at the chart, Bitcoin just seems to go up. And Bitcoin isn't the only one. Altcoins seem to just go up. And so, yeah, if you're mining them at a loss today, big fucking whoop-de-doo. It doesn't matter. In 3 or 4 days, the price could go up 20-40%, like a lot of coins did today, and you could be making your profit there. You never know. You never know. But yeah, so with regard to the current kind of dynamic going on in mining, I think something odd is happening where we're seeing some chips that have specs as small as 7 nanometers being out there in the market. Okay, now we've also got stuff that's in the 20-something nanometer stuff. I mean, specs, or dimensions rather, that's coming out at the same time as quote-unquote new hardware. And so I think that's causing some people to say, well, I don't want to buy the 20-something nanometer stuff because it's going to be less efficient than the 7 nanometer stuff. So I'm going to wait for 7 nanometer stuff to be more prevalent in the market because the current prices are too high, and we'll go on from there. And on the hardware manufacturing side, Intel is still planning stuff at 14 nanometers, or 14 or 16, one of the two. I don't know. They've still got stuff slated as new hardware coming out at that, even while they have stuff slated at 7 nanometers. And I guess 10 nanometers is, for their architecture, is as efficient as a 7 nanometer in some popular chipset. I haven't studied that one 100%, but I think the comparison was between AMD and Intel, and that an equivalent Intel chip at 7 nanometers was equivalent to like a 10 nanometer Intel chip, one of the two. I can't remember the exacts on that, but I'm sure if you Googled it, you could find out. The point being that these specs are some of the benchmarks that people use when they're trying to decide what hardware to purchase. And so I think some of the signals that they've also been getting from hardware manufacturers have been kind of discouraging. Like Nvidia, they've been talking about, we're going to have a price decline and we don't expect mining to be much of our business in the future. And I'm going to tell you right now, cryptocurrencies are popular and are profitable because people can mine them. As soon as people cannot mine them, that will go away. The interest in them will go away. And people will revert to being interested in coins they can mine. I mean, this isn't we've seen this trend before. You know, that people have been talking up Bitcoin's dominance and how Bitcoin has been gaining dominance. And it's up to like 49% dominance again. And at one point, Bitcoin was it. Bitcoin was at 100%. And then some fuckery started happening behind the scenes. And people said, well, I don't want to do that shit. I want to jump clear of that. And so all of a sudden we had the altcoin boom. And then Bitcoin lost about 50% of the interest in from miners. And users, for that matter. But that indicates to me that part of the interest people have in cryptocurrencies is the money that they can make by mining. You take that away, you take that incentive away, and suddenly it's no longer valuable to them. Because it's no longer accessible to them. They don't have access to it, so it doesn't have any value for them. You know, it's like silver or gold bars. You know, if I found a whole bunch of gold bars, I wouldn't know what the fuck to do first. I mean, for one thing, I'd probably bury them back where I found them. Either that or I'd dig them up from where I found them and bury them somewhere else. But then I would go about, like, very tentatively looking for some market to exchange them in. But the fact of the matter is that chances of me being held up and having the gold ganked from me by either a state or private actor is pretty fucking high. You know, I saw this video of these guys. They restore tanks, and they had an Iraqi tank, and they were going to restore it. And so they're going through it, and they're stripping out all the gear and cleaning it up and shit. And they find this like cubby in the tank that's full of gold bars. About, I think it was like $2 million worth of gold bars. As far as I'm concerned, that shit should go back to the government of Iraq because, well, it was Iraq's gold to begin with. But the point being that, like, they're not going to get that fucking gold. They're not even going to get the money that the gold was worth. That shit's gone. Forget about it. You know, the state probably came in and said, "Oh well, these gold bars were obviously the product of a theft, and so you can't have them, and fuck you." You know. So yeah, cryptocurrency mining, it's going to be a thing as long as cryptocurrencies are popular. And we're going to find that out on the Bitcoin side. You know, they keep trying to edge people out. Well, I'll tell you what. If they edge it to the point where it's no longer profitable for any small-time miners to get into it, people will just lose their interest in Bitcoin altogether and shift over to currencies that are profitable for them to mine. And that 50% that Bitcoin, that 50% dominance that Bitcoin has, yeah, you can throw that in the shit can because that's where it'll go. Anyway, speaking of Nvidia, you know, they had all these expectations that their business is going to go down, and so I think because they haven't been doing enough to try and encourage the mining market or the market that's available to them from miners, I think that they're going to see an even greater loss. But it's not going to be because people have stopped mining. It'll be because they stopped mining with NVIDIA cards. That NVIDIA is going to get what they want, and they're going to get their fucking gamers, and that's the market they're going to have. You know, they're going to have gamers, they're going to have AI, and they're going to lose mining. And I would argue that they're probably going to lose gaming and everything else shortly thereafter. Because right now, mining is driving shit like hardware development. And I talked about this a lot on the last episode, where I really think that mining is probably the primary catalyst behind all development at this point. That the hardware manufacturers are trying to make their shit more efficient, and they're competing with hardware manufacturers that are making stuff for miners. You know, and miners, their primary mission is making more money, getting more bang for the buck out of the hardware that they're manufacturing. Because that means that miners will choose their hardware over other hardware. And as soon NVIDIA has been showing a lot of signs that they're not all that interested in following that. You know, that they're all up in arms about how they're getting bitched at by their gaming segment. And I don't feel sorry for them at all. Like I said, I think that their cold shoulder toward the crypto community is going to result in their loss of even the gaming. Because The product of the people following with the cryptocurrency market is going to be that they're going to be pushing their hardware even harder than they did before because they want to compete for the mining money. They want to compete for the miners' money. So next thing you know, AMD is going to be eclipsing NVIDIA because they've been scaling up their hardware for mining efficiency. And NVIDIA has not. It's like, really, you can only get so many frames per second into the eyeballs of people. And you can improve your rendering and how it renders and all that other business. But the driver, the economic drive behind it is relatively minimal by comparison, I think, to mining and what the future of mining looks like. See, I don't see mining dropping down to nothing. I see people like you and me being in mining for a long time to come. You know, even if there were to be, in the near future, some sort of ban on mining hardware or ban on importing mining hardware or some shit like that, that people will repurpose available hardware to continue mining. Believe it. Anyway, I got this article here on MarketWatch.com about NVIDIA. This is by Wallace Witkowski. So yes, clearly penis. NVIDIA Corp's shares dropped in pre-market trade Friday after the graphics chip maker's revenue outlook was hit by a sudden decline in cryptocurrency mining sales. NVIDIA down 4.9%. Shares were down 3.9% in the early session after falling about 5% after hours Thursday. Shares logged a 0.6% decline to close the regular session at $257.44. NVIDIA shares are up 33% for the year compared to a 6.3% rise in the S&P 500 index, a 13.1% rise in the tech-heavy NASDAQ Composite Index, and 6.4% gain in the PHLX Semiconductor Index, down 0.73%. NVIDIA reported that sales related to mining of cryptocurrencies such as Ethereum were much lower than expected in the second quarter, and it is not counting on any sales related to blockchain for the rest of the year. Quote, our revenue outlook had anticipated cryptocurrency-specific products declining to approximately $100 million, while actual crypto-specific product revenue was $18 million. Said Chief Financial Officer Colette Kress in a statement. Whereas we had previously anticipated cryptocurrency to be meaningful for the year, we are now projecting no contributions going forward. Yeah. As recent as 1 year ago, NVIDIA Chief Executive Jensen Huang showed a lot of enthusiasm for the cryptocurrency market, remarking that it was, quote, here to stay and the market will grow quite large. But he was calling for a significant drop-off. Quote, it is the case that we benefited in the last several quarters from an unusual lift from crypto, Huang said on Thursday's call. Quote, in the beginning of the year, we thought and projected crypto would be a larger contribution to the rest of the year, but at this time we consider it to be immaterial for the second half. For the third quarter, NVIDIA estimated revenue of $3.19 billion to $3.32 billion, lower than analysts' average expectations of $3.34 billion, according to Factsheet. NVIDIA's second quarter results beat Wall Street estimates in nearly every sales category, but the smallest segment appeared to draw much attention. The big surprise came in PC and mobile OEM revenue for the quarter, in which cryptocurrency-related sales are included. Those sales fell 54% to $116 million from a year ago, while analysts had forecast $185.2 million. NVIDIA reported a 52% surge in gaming revenue to $1.81 billion from a year ago, while analysts on average projected $1.75 billion, according to FactSet. Data center revenue jumped 83% to $760 million, while analysts were expecting $740.1 million. Visualization revenue rose 20% to $282 million, while the Street forecast $255.4 million. Auto-related revenue rose 13% to $161 million, and analysts had expected $147.9 million. Now, you know what? We didn't really want to follow all that bullshit. Let's see. Of the 39 analysts who cover NVIDIA, 24 have buy or overweight ratings, 14 have hold ratings, and 1 has a sell rating, with an average price target of $281.05, or 9% above Thursday's close. So yeah, I would explain NVIDIA's loss in revenue to be kind of a reflection of the market increasing in the number of participants. Because as we saw in previous articles today, hashing power is up. So, what's that tell you? It tells me that the interest hasn't gone away from mining, it's just gone away from buying NVIDIA cards for mining. That could be just me, Sorry, I had to rehydrate there. But yeah, I really do expect mining to continue to shift around as far as the balance goes, as far as who's doing it. The energy is going to be a big driver of where everybody goes, and that has been, as we've noted on this show several times, where mining companies have been going where the cheapest electricity is available. And I expect energy to continue to get cheaper as we go forward. It seems like a lot of localities are seeking to harness their local kind of natural and renewable sources of energy. And like I said, I do expect that trend to continue. I think a lot of countries are seeing the end of oil on the horizon. That we are down to a point now in oil where it's not profitable to negotiate for buying the oil. It's more profitable to take over a country and sell their oil to yourself at a discount. And that we've been seeing that in Libya, we've been seeing that in Syria, we've been seeing that in Iraq, and I'm pretty sure the expectation, according to some of the materials I've read concerning our foreign policy, or at least the United States foreign policy, that they kind of intended to keep the rule of certain countries that were producing oil kind of like in limbo, as failed states. And I don't think that's really gonna work out that way. For one thing, I think Syria is going to actually get the upper hand, and this whole bogging down of Russia and China ain't gonna really work out as well. For one thing, I think the think tank that was involved in constructing these plans wasn't considering the fact that China doesn't separate between business and government. So all of our laws concerning intellectual property mean jack shit to them. And the fact of the matter is they have been farming out high-tech shit to Chinese fabs for at least the last 30 years. And that includes weapons systems. So, you can think that compartmentalization, as it has been done, will work over there in China, but I can guarantee you they are overlapping every fucking schematic, every little piece of IP that enters into one of their fabs, and they're digging for stuff that they're not being offered readily up and available. But I can tell you right now that they're overlapping all of it. And they're saying to themselves, okay, what's this really a part of? What's that really a part of? And they're piecing it together. Oh, this is all the plans for the F-35 or whatever. This is the navigation system. This is the weapons system. And, and like I said, that shit's been going on for the last 30 years. So, you really think that they're that far behind us? Or that they don't know what's in store for them on the ground? Unless it's just all one big global depopulation plan or some shit like that, and all the leaders are in on it. I don't really expect that to work out all that well. And the issue that I was talking about with Facebook and how that's played out in the free market before is I really think that we're going to see the end of Facebook within the next probably 2 years. That people are just going to say, you know what? I'm sick of being fucked around by you people. Bye-bye. And we're going to have another MySpace moment where Facebook is going to be the next MySpace, if it isn't already. But I don't think that people are going to stop talking, and I certainly don't think that they're going to stop referring one another to quote-unquote alternate news sources. It's like the Drudge Report and Slashdot and Coinbase and all these other news sites. They didn't become popular overnight. They got their popularity through people going to them. Like Alex Jones. Alex Jones wasn't as popular as he is today. When I started listening to him, back when I started listening to him, every once in a while he'd get a blurb on Coast to Coast AM or something like that. And his politics have shifted all around. You got to really wonder what his colors really are. But for the most part, he's always been for the American people, it seems. So, when you start seeing people like him being censored on Facebook, if you're really interested in that stuff, just get off of Facebook. Fuck Facebook. Fuck Zuckerberg. If he's going to abuse your trust like that, not really worth the clicks. Anyway, let me see what else I got here. I got a few tabs still open here. Hold on, it's kind of interesting. Suspect currency, not really interesting, not really where I wanted to go with this episode. This is kind of interesting, and it is from a crypto-related site, so we'll just go with it. This is from BitcoinWarrior.net. The Anatomy of a Crisis, a Strong USD and Disappearing Liquidity. And this is authored the 16th of August 2018. And so here we go. Since March, the dollar has rallied over 7%, and it's caused the emerging markets to implode. But the bigger problem is what lies ahead, and that's a global dollar shortage, which the mainstream media continues to ignore. I've touched on this a couple months back, wondering when the mainstream would start to realize that the stronger the dollar gets, the more pressure global economies will feel. I wrote, quote, "This is going to cause an evaporation of dollar liquidity, making the markets extremely fragile. Putting it simply, the soaring U.S. deficit requires an even greater amount of dollars from foreigners to fund the U.S. Treasury. But if the Fed is shrinking their balance sheet, that means the bonds they're selling to banks are sucking dollars out of the economy. the reverse of quantitative easing, which was injecting dollars into the economy. This is creating a shortage of US dollars, the world's reserve currency, therefore affecting every global economy. Since then, things have only gotten worse. First, Jerome Powell, the Fed chairman, issued a statement at the end of June that they would actually increase the amount of rate hikes over the next 2 years. This means they're tightening even faster. Second, the U.S. Treasury increased their debt borrowing needs to the highest since the financial crisis, which was over a decade ago. Therefore, they will need even more dollars to fund their spending. Quote, the department expects to issue $329 billion in net marketable debt from July through September, the fourth largest total for that quarter on record and higher than the $273 billion estimated in April, a 17% increase. The Treasury said in a report Monday. The department's forecast for the October through December quarter is $440 billion, bringing the second half borrowing estimate to $769 billion. Coincidentally, that's the same amount of the TARP, the highest since the $1.1 trillion in July through December 2008. I'd really like you to really internalize that for a moment. That 1.1 trillion, part of that was, I think that part of that was TARP. Yeah, as a matter of fact, I'm almost positive it was. But the other 300 something billion, that was like quantitative easing 1 or something like that. And third, China's growth is slowing down, while the emerging markets are draining their US dollar reserves even faster because of the strengthening dollar. So, in summary, as global dollar liquidity continues drying up, there will be a wave of risky positions being dumped and dollar disease, selling assets to raise dollars to buy back debts worldwide. What we know is true from Economics 101 is that the lower the supply and the greater the demand equals a higher price. As the pool of USD keeps drying up, the price of the dollars must rise. This translates into higher offshore dollar funding, higher interest rates, which is killing dollar-indebted countries and corporations, like Turkey today. This is why I expect global earnings recession sometime by mid-2019. Bloated balance sheets worldwide can't afford the deflation that comes from a shrinking dollar pool. How did things get so bad? Thanks to the Fed's decade of ZIRP, zero interest rate policy, investors have been starved for yield, and this forced them into riskier trades. A popular trade that most hedge funds like investors utilized is called the carry trade. I'll break it down. The carry trade is when someone borrows money with low interest rates, like the US or Japan for example, and converts the money into currencies with higher interest rate bonds, such as Turkey. The trade makes money two ways, from the yields of the foreign bonds bought, and if the currency borrowed depreciates versus the currency converted into appreciates. For example, if I borrow $100,000 at 2% and convert it into Turkish liras to buy 2-year Turkish bonds yielding 8%, I would make a 6% return. And hopefully in 2 years, once the bonds mature, the dollar has weakened against the lira by 10%. Then, once I convert the $100,000 back, I make $10,000 just from the conversion alone. As long as the dollar depreciates against currencies and the Fed kept interest rates low, which happened between 2008 and 2015. But today things are far different. In this current environment of tighter financial conditions and drying up liquidity, the hedge funds, big banks, and shadow banks with their carry trades are deep in the red. Hence why we're why we're seeing the emerging market credit bubble popping. As we learned from Ludwig von Mises and the Austrian business cycle theory, ABCT, when the Fed raises rates, the misallocation of credit is revealed and must be unwinded. I think future financial historians will scratch their heads, wondering why markets today continue discounting this serious dollar shortage problem. The easy money years post-2008 fueled a massive debt bubble, causing asset prices all over to rise. But the market isn't expecting the tight money years today to cause asset prices to drop. It's like they think that drinking alcohol today will make them feel good, but don't believe there'll be a hangover tomorrow. So what's next? I believe the US dollar will continue rallying because of all that I mentioned above. As hedge funds, institutions, and investors continue unloading their emerging market positions, things will only get worse. The stronger dollar will cripple these, quote, soft money countries, and they will drain their dollar reserves as they vigorously try to defend their currencies. For instance, the Vietnamese central bank has sold $2.5 billion of their... Oh, shit. That's been like dying to come out for a while now. I've been stifling it. For instance, the Vietnamese central bank has sold $2.5 billion of their dollar reserves in July just to, quote, limit depreciation of the Vietnamese dong. And Reserve Bank of India, RSI, continues to sell US dollars after selling $6.2 billion worth to prevent the Indian rupee from depreciating further. Here's an expensive question. How much longer can they do that before how much longer can they do this before running out of dollar reserves? True, most emerging market countries today don't have a fixed dollar peg anymore, but since 2008, they've loaded up on massive amounts of dollar-denominated debts, and this puts them in the same negative situation as a currency peg would. Don't be surprised if the next crisis kicks off the emerging markets, like the 1998 Asian contagion/EM crisis. Countries with low cover ratios, small amounts of dollar reserves, will fall over first. Then the contagion will spread across all emerging markets and most likely spill into developed markets. Don't expect President Trump and his America First agenda to show pity on these countries either. Until the U.S. starts to slow down, and only the U.S., anticipate the Fed will continue tightening, which will further shrink the pool of dollars, drying up global liquidity, making the world's markets much more fragile. Even if no one else talks about this problem, at least you heard it here. And here. Yeah, that's really interesting. And I think it will affect us here in crypto. You know, he was talking about emerging markets. We're one of those. You know, but with regard to how we affect the market, I think that we'll kind of be at an even keel with it, because as these currencies depreciate against the dollar, they'll also depreciate against Bitcoin. And so it'll take even more of them to buy Bitcoin. And I'm expecting that Bitcoin, once it's sucked out of the US markets and into these emerging markets, that the supply shift will cause the price to go up. Call me crazy, but it is a limited supply item. So, yeah. And I gotta wonder about things like ETFs and whatnot with regard to that in the US, where they might be trying to get ahead of this little thing and get it to where they can get supply of Bitcoin before there is any kind of ETFs. because that will initially at least cause the price of Bitcoin to go up. But yeah, I'm thinking that because we are seeing emerging markets where the price of Bitcoin has already gone up in relative terms versus our markets here, I imagine it'll be a very short period of time before people start really utilizing the capabilities they have to shift around Bitcoin and be selling the shit off of the exchanges, OTC trading. But that we're not going to be honoring these national borders, and we're going to be shifting money around, from one nation to another, and the recipients of which will be able to make money on the other side of it. So yeah, everybody will make money. Imagine it this way. You got somebody in Zimbabwe, got a friend in Zimbabwe. They're willing to give you $8,000 for a Bitcoin, right? But $8,000 US into your bank account for giving them one Bitcoin. So you sell them a Bitcoin, they give you $8,000. Bitcoin in Zimbabwe is actually $10,000. So they turn around and they sell it for $9,000. They make $1,000. You make $1,500. Everybody's happy. The guy that bought it in Zimbabwe, he's happy. He paid $1,000 under market. And see, I think that kind of capability scares the shit out of some people, because it is there. I mean, I had a friend in South Korea, and we were Skyping like the guy was next door. It was all in real time. It was very, very fast. I could have been sending him millions and millions and millions of dollars in Bitcoin or other cryptocurrency, and nobody would have been the wiser. Unless, of course, they were watching us directly. But they couldn't have done anything to stop it unless they terminated the feed or something like that, or did something to intrude in the conversation. But otherwise, they would have absolutely no control over the commerce that was taking place there. And I think that's a very, very powerful tool, especially when we're talking about how fiat currencies have been depreciating against Bitcoin and how they've been depreciating against one another. I mean, really, when you look at previous economic calamities that have happened on this planet, and you think about the availability of markets to people, and how they had to stick with the things that they had available to them in order to make money. Now, if you think about, say, like the Great Depression, and how currency being unavailable affected the labor market. Now imagine that you could be paid in a cryptocurrency that's honored globally, not just here. That means that there's additional markets out there for your currency, that you could get paid from one entity, and that you could pay those coins to somebody else in trade for something, or just trade for another currency and make money on it. I guarantee that the depression that was experienced here in the United States was not experienced by everybody, and it most certainly was not experienced by people who had access to markets that were international in scope. So, again, if you were to take even the communication capabilities that we had back in the 1920s, people had more than enough capability to send around Bitcoin. I mean, I can read off an address to you on a phone call. I can send a letter to you with an address in it. And it might take a month or so to get to you, but once we've established that connection, anytime I send money to you, or anytime you want to send money to me, you could do it, and we wouldn't have to go back through the phone call or the month long to get the letter to you in order to have that happen thereafter. So again, do you really think that we would have experienced the depression as we did if we had access to global currency markets? I say no. And I say the same about any depression that may be coming on the horizon. That if there's ever a liquidity crisis so bad, people will get together and they will start mining cryptocurrencies. They'll create a new one just so they can mine it and use it to transact with. That's the way I see all this shit playing out. I could be wrong, but I really, really doubt it. I mean, that's the way it's been going on in Venezuela and Zimbabwe and Somalia and all the other places where they do have some internet access, but they've gone through a fucking currency crisis due to the fiat currency issued by their country. You know, India's put all kinds of restrictions on currency transfer and whatnot. And I'm sure they're trying to limit people trading in cryptocurrencies, but they're not being all that successful. That I think that the people that know how to use cryptocurrencies properly are not suffering one whit due to India's changing monetary policy. Anyway, let's go ahead and throw back down into some music. It's been a little while. It's about that time. We have not played any Within the Ruins. So, here we go. Elite. Here on Coin Metal. And that was Testament with John Doe. Now, assuming, of course, my program didn't just choke, which it looks like it did. And so close to the end. That's okay. Fortunately, we're actually recording it this time, so no problems there. But for those of you who were listening in, my apologies, but, you know, I'm back. Because, you know, that's just how I roll. You know, I'm here, and then I'm here, and then I'm here. Anywho, I do have one last little thing I wanted to touch on today. Because I thought this was just so clickbaity that I had to do it. This one's on livebitcoinnews.com. Bitcoin is a lot of hope and hype, says Six Group executive. This is by Nick Omo. This is on August 18th, 2018 at 1 a.m. No indication of time zone. Although judging from it, I would say this is probably from back east. Continuing on. Thomas Zeeb, the head of securities and exchanges at the Six Group, isn't a fan of Bitcoin and cryptocurrency trading. Speaking in a recent interview, Zeeb spoke about his opinion on Bitcoin, the upcoming SDX launch, as well as other topical issues in the cryptocurrency space. Nothing behind Bitcoin but hope and hype. Speaking to Business Insider, Zeeb characterized Bitcoin as having little merit beyond the realms of hope and hype. According to him, reputational problems were plaguing the top-ranked cryptocurrency. However, Zeeb was quick to point out that Bitcoin wasn't alone in that category, saying, "But let's face it, whether you're in a traditional or digital market, there's always been listings and securities you can name, US and Canadian penny shares, Australian mining shares, that have always been listings that are hugely risky and in some other ways potentially problematic." As far as reputation is concerned, Bitcoin gets a negative rap that is utterly tangential from what the reality is in the market. A recent statement by a high-ranking agent of the U.S. Drug Enforcement Agency revealed that speculative investments accounted for the greater majority of Bitcoin transactions against drug trafficking and other illegal activities. SDX unlikely to list cryptocurrency. Zeeb also spoke about the Swiss Digital Asset Exchange, SDX, and its plans of becoming a mainstream bourse for digital assets. The SDX, which is run by the Six Group-owned Swiss Stock Exchange, will focus on ICO tokens. According to Zeeb, the SDX wishes to expose the ICO tokens to institutional investors, enhancing the legitimacy of the market. Commenting on the plan, the Six Group executive said, "There is demand from institutional clients to find a way to legitimize and bring asset safety into play. Our job is to bring capital to companies at the end of the day. That's changing." With its focus on ICO tokens, Zeeb insists that the SDX will not venture into the cryptocurrency trading market. According to Zeeb, cryptocurrency exchanges that handle such trades are dime a dozen. Hence, SDX feels no incentive to participate in a saturated environment. Instead, Zeeb prefers that the platform focuses on bridging the funding gap faced by blockchain startups by providing a marketplace where their tokens can be tradable assets. Do you agree with Thomas Zeeb's characterization of Bitcoin as hope and hype? Let us know in your views and in the comments section below. Yeah, I think this is another case of somebody who is very, very used to institutional trading and institutional trading vehicles, and is very risk averse to anything he's unfamiliar with. And that's something to be lauded, especially in today's environment. But as far as the impacts to his customers would go, I see potential for them taking the even bigger risk. ICOs, give me a fucking break. 90% of them fail. I mean, the same can be said for altcoins, but honestly, altcoins last a hell of a lot longer, and more of them stay around than ICOs. And I find it fucking hilarious that they want to bring legitimacy to ICOs. How the fuck do you supposed to do that, guy? You got 16-year-olds writing up ICO projects. You're going to tell me you're going to make that any safer because you involve some sort of institutional investor? You will not do any such thing. You can fantasize that you can bring quote-unquote your standards of quote-unquote legitimacy to this market, but I can tell you right now that's not going to happen. You are going to learn a new definition of legitimacy, and it's not going to be anything like what you consider to be legitimate now. If it doesn't have a blockchain that's mined by the public after the end of this year, you're probably not going to be investing into it. Or next year, I would say. You're probably not going to be investing in it. You're probably going to turn your nose up at it because it doesn't have any visible support from the public. And when I say visible, I mean the amount of hashing power that they're dedicating to it. And I think that this whole dollar squeeze thing that we were talking about earlier, I think that's going to drastically impact cryptocurrency markets, because where these countries are not able to rely on their central banks to produce a currency that doesn't devalue by the millisecond, they're going to shift to cryptocurrencies instead. They're going to be able to observe the activity of the networks and say, you know what, this is way better than what I'm experiencing with my central bank, so I'm going to put my money in that instead, because I will at least retain more of my monetary value that I can later spend. And as far as the Fed's policy of tightening, I don't think that is going to save it against Bitcoin. Because again, we're talking about a commodity that is transacted and traded globally. Globally. The markets for it are global in nature. That being the case, the containment that's absolutely necessary for any kind of monetary control or any kind of bullshit that you're trying to pull by adjusting the amount of dollars in circulation, it's not going to help you. People are going to use other units of account to pay one another with, and the migration over to cryptocurrencies will hasten. I also expect the ability of the average user to remain completely anonymous while transacting is going to increase. I've predicted this before, and I'm predicting it now, that it will increase, that you will only create more demand for ways to circumvent your silly ass. And it is with that I would like to close out this episode. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I'd like y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. Thank you very, very much for listening. And as I said, we will be back again on Monday. And as far as our last dance is concerned, I'm going to go ahead and throw it down. Gizmachi, burn. Thank you again for listening, and you all have an excellent weekend.